Good afternoon. Tuesday afternoon is my time to spend just a little bit of my time with you, 30 minutes, okay? We're covering things that you're always thinking in your own head and wondering what is the best way to do. So obviously, it is not possible to give you the solution of what the best way to do, but what we do is to make it understandable for you. So our topic today is called adding a new partner. When you want to expand your business, you want to add a partner. Adding a new partner is a thing. So what do you think about your finance? Of course, before you adding a new partner, you probably thought all the other things. You had the partner sign the legal document, and you went to your attorney, already consulted, and then you feel like you can afford, and you did all kind of thinking already. But all of these considerations are valuable. But what we are covering today is more like how that reflected on your taxes, how that would affect your bottom line, and what exactly that is when you have a new partner inside of your company, inside of your partnership. So before I go there, I want to brag about our YouTube channel. And you know that Community CPA YouTube channel is a very active place for knowledge exchange. We give you what we know, and the folks, all of you, getting back to us saying we want to know more. We want to understand this and that. So this is a knowledge exchange field that we use this channel, and no fee, no charge, free to all of you. And we want to put in our energy and time and intelligence to make sure that the knowledge is transferred to all of you so you can make a better decision in the field, right? And we also want to draw your attention to our website. This is our website. If you see across the top, you see the online with us. That is our on board with us. That's our onboarding portal where you literally can onboard yourself with us midnight at night. You don't have to talk to anybody. You can just go on there, create your own login, and just start uploading information and let us know what you are thinking, stuff like that. Appointment button is where you can make appointment with partners. These are all partners, including myself, and you can book our time and start talking to us. Obviously, pay invoice and the client portal, and we also have a payroll portal where is there you put in your payroll and we can process your payroll. So with that said, no more delay. Let's just go ahead, understand what we talk about today. And I am sharing my screen with you, and I know it's blocked up a little bit with my beautiful picture, and I don't mind to call it beautiful picture just because President Trump was sleeping in his court, and he said that he's not sleeping because he's closing up his beautiful blue eyes. So that's what he's doing. So he can even call beautiful blue eyes. I think I can call my webinars as a beautiful place too. All right. And about our firm, we are more than 27 years in practice history. We have more than 10,000 clients. The last time when I looked, it was about 12,000. But I really do have to spend some time to get accurate numbers here. But we have 4 branches currently. Iowa, Minnesota, California. Iowa has 2 branches. We're working on our number 5, which is Houston branch. And on my Saturday webinar, ladies and gentlemen, I'm going to show you the building in Houston. We got the building mock-up come back, and it's an existing building, but we want to make it look like Community CPA's building. So that picture is already there. And our firm, I am the CEO, the managing partner. I actually served on National Taxpayer Advocacy Panel. This is a federal advisory committee to provide advices to IRS. So just give you a little bit of key point so you know who we are. And this is the 2 books I already wrote and published. I write my own books with client stories on my own journey. So I started up Community CPA. So I grew the firm, so I wrote 10 a.m. Right now, I'm expanding the company, so I'm writing the 2 p.m. I have a 6 p.m., which is retiring from your business. honestly speaking, I don't know what to do yet with that book, but the 2 p.m., that is what I'm doing right now, is also what I am writing right now. No responsibility disclaimer that's related to the webinar content, so you want to take it, to yourself carefully. Don't just listen to what the website's saying, right? Now, growing your business, adding a new partner, first of all, I want to say that is not the only way for you to expand your business, okay? And you don't have to just get a new partner to expand your business. You can have so many ways to expand your business. You can do what Community CPA is doing, setting up different locations, and you can acquire other company, and you can also borrow money to expand. You can also tap into the government assistance program, see whether they have any capital adventure funds for you so you can expand your business. And let's not talk about all of this today. I just want you to understand that when you want a new partner to your business, what you need to do, what you need to understand. So let me show you a simple illustration so you understand what you are getting to. Of course, when you want a new partner, you're looking at gaining more market, produce cost sharing, increase operation capacity, right? And share business risk. Did you hear me saying that? You want a new partner because when they come in, they are going to share your risk. Okay? And now, implement new ideas. That is, of course, come with more genius participating in business. That is, no-brainer. We know that. So let's look at this. I'm using a very silly example because it's easy. And, let's say you have a partner organization already. And then you have 4 partners. Each one of you have a basis. This is a very weird term, but I just want you to understand that basis basically representing how wealthy each partner is inside of that organization. So basically, if I say you have a $20 basis, that means that you have, in your partnership, you have a $20 asset. That whether the asset is cash or equipment, it doesn't matter. We're talking about $20, you have it, right? If you lose $20, the IRS allow you to deduct your $20 out of your other income, saying that you lost it. But if you lose $40, you cannot deduct the 40. You can only deduct 20 because you only have $20 basis. Okay? So now you may say, well, what happened to my other 20 I lost? I lost 40. That 20 will go to the future years when your basis is coming up. So now, let's say you have 4 partners, $20 each. So you have $80 total in the partnership, right? So now a new partner comes and wanting to buy your shares. You want to be number 5. I know I did 1/3 interest on the top. Ignore what I wrote there. Look at that $16. Because this partner comes in say that I want to be the number 5 and I want to be equal with all of you. Then what happened is the $80 divided by 5, right? So the $80 divided by 5, so you got a $16 each of their base. So basically each of the partners need to get paid by $4 from this new partner. Then the new partner could share what? Could share the 1/5 of all of the gains and losses and the liabilities. Okay, so this is when we say gaining new partners, you're not gaining new partners just so they can share the money. You're gaining new partners because if you get sued, you owe $3 million, they are going to put up their share too. Assume that, of course, that's what's important, right? You must have basis in your partnership in order your new partner come in to pay you for accordingly the amount. If your base is 0, then your other new partner comes in and don't need to pay because they can get the shares from you. They can get the percentage of ownership from you. You have no basis. The partner has no basis. Then they come in at 0, right? So adding a partner may appear to be really simple. Handshake, good body, we drank last night, so this morning we're partners. No, you need to look at your tax return to really understand what is all consistent with before you can decide how they're going to be your partner. Of course, your partner could come in and goes, well, whatever you have here, and I'm bringing another 100,000. So can you tell me what is the total percentage I would own to your company? So then you would be looking at your existing value, right? Your market value of your company, and 100,000 would purchase in there how much of a unit membership that or shares of that part, right? So those calculations are really rather mathematical, and I don't recommend you to do it yourself, and you should go into your CPA office or your attorney's office, have them decide that, calculate that for you. The function of basis. This is, I say that a lot of times when you are in the partnership kind of talk, basis will come up all the time because when you meet with your tax preparers, they talk about basis too. You may be getting a call from your tax preparer says that, because of the base limitation, you actually cannot deduct all the losses you have lost, and you can only deduct $5. But you lost $5 million. So that is the base limitation. So basis is a calculation, is a ledger for your partnership lifetime. So every partner has a list of we call that capital account. So you would track of your basis when it is when you need to add more into basis or subtract more, depends on how your operation goes, also depends on what activity you get in. So those are important understanding for you to know that it's not just your company income statement. When you are in the partnership setting, when you are sharing things with the other partners, and that basis coming in to be something that limit on what you can do and cannot do. It is important to note that the base can never go negative. Okay? What that means is that you cannot be say your base is $100 because you have $100 in the partnership, and that's your money. That's $100, and you cannot be negative. So someone cannot go, my basis is negative $100. No, if your basis is negative $100, your other $100 is actually not gonna be counted into basis. It will be, from the accounting tax standpoint, it will be pushed to the future years to be absorbed, right? Or if you draw money so much over your basis, let's say your basis is $100, but you drew $200, then you have a capital gain, okay? So with that said, we want to know that you don't want to go above and under. Above basis is fine and you accumulate more, but you don't want to go negative on the basis because it is different meanings in tax world and accounting world. And partnership, a partner is limited to the number of losses they can utilize in a given year to the extent of the basis that they have in the partnership. And the remainder is suspended, carried forward to the future years. This part I kind of mentioned to you when you do taxes. If your tax preparer called you, goes, I know you lost, a lot of money, but you can't really deduct it because the base limitation is there. You don't have any basis anymore. Heard of that, right? That is related to this. And understand the partnership basis. And one thing, I want you to get familiar with the two terms, outside basis and inside basis. Outside basis are the things that you can find on your tax return. Okay? And inside basis are the one that your accountant is keeping. And especially when you have a partnership asset get sold or disposed or transferred, that's where your inside basis may not be the same as your outside basis. So the basis is a whole new area inside a partnership. When you add a new partner, all of these spreadsheets need to be reconciled and completed so everyone is fair. And do not just go a handshake on adding partners. Obviously, if you say, well, other than handshake, I don't want to do anything else, then don't do a new partner. And you can bring a consultant, pay by the consultant result, and you can borrow a loan to expand your company. You can do expansion by setting up different areas and hiring more employees, but don't go on this route, right? When you go on this route, you must take care of your bases. Follow your bases. When adding a partner or making other changes, a partner's basis in his or her interest can go frequently adjusted. So it is important to keep a proper track of that. A lot of time, the tracking of these bases is really with your CPA firm. I mean, how many bookkeepers out there and really understand the basis side of the calculation? Maybe not, but you can find professional folks to help you, especially if your partnership has a lot of properties, a lot of equipment, depreciations all over the place, and partners, in and out frequently. Yes, you need a very good accounting on basis. All right. The last slide related to this is built-in gain and loss. The tax code requires that built-in gain and loss on assets that were held by the partnership before the new partner was taken in and be allocated to your current partner. So this is something that I want to mention to you because you may have a piece of equipment or building, for example, that you bought it many years ago in the partnership. Now it's growing in value. Before you admit the new partner, you need to get the built-in gain put in place. Because otherwise, your partnership base is going to be messed up. So make sure that this built-in gain on the value increase is being allocated to existing partners, and before you admit the new one. Very, very important. And in general, built-in gain and loss is a difference between the fair market value and the basis of the property. So you can imagine that example I give you. If you bought a building for $100,000, now it's already $1 million. You actually have a $900,000 built-in gain that need to be allocated to the partner, to the existing one before the new one coming in. All right. With that said, I hope I have given you enough buzzword for this 30 minutes to just get you to realize that, if I admit a new partner, and there's a little bit more things to do, not as simple as a handshake and a couple pieces of paper signed and it's done. No, you need ledger. You need accounting. You need define the basis, clarify the basis before everybody shake hands and say go. All right. So again, want to show you our website. If you like to know more, here we are, and you can engage us. We do video conference, video calls with you, and really very effective. Even sometimes it's even better than face-to-face because on the video, we can show you exactly what we have, so we can follow you, unlike if you are sitting in front of me. So these video conferences are powerful. And the last slides I have here for you, and it is related to who to contact when you have a new topic for us, and we can continue dialogue on the new knowledge. Recently, what we have is this, we recently put out webinars related to Department of Labor's rule update, right? And related to the exempt employees and the salaried employee, how much they need to get paid starting from July 1st, and then go forward on the, on January the 1st. So those are important knowledge to keep in mind. But I would not recommend anyone to make adjustment right now because I have, we know history, right? Back in 2016, and the same thing came out, and it was shot down by Texas Supreme Court. So it never really become live. So now this comes in. I do not know who is going to try to shoot it down. So we don't want to make any changes. We just want you to understand what is coming up. But by July 1st, if nothing happened, you need to talk to your payroll provider and to make sure that you are doing your payroll properly. Very important. So with that said, and follow us on YouTube. There's so much knowledge to come in, and I want to make sure that you understand what you're doing so you can protect the wealth that you already generated. And, one of our client one time told us that, if you're not in compliance, in 1 year, you lose all your 30 years accumulation of wealth. So they said that in Chinese means, 一夜变成解放前, which means, overnight you'll be dirt poor because of you are not following the rules and the government come and just take everything, right? So that's not an exaggeration. That is the reality for business people. So I want to make sure that you protect yourself by following the rules and learning as much as you can. We will see you again on Saturday. And I wish I could tell you what I talk about on Saturday, but I forgot. And we do have a plan. So we will talk again on Saturday. I'll see you.